So today is Monday, March 29th, 2021, 12:03. There's my number, 203. And Alabama did lose last night in the Sweet 16, so we didn't make it to the Elite Eight. And as much as it hurts, it really kind of makes you think about our trading, doesn't it? Because what we do is we don't shoot 3-pointers, right? In our investment strategy and what we do together, we're not 3-point shooters. What we do is we go in with layups. Much prefer going in with a layup, making the basket, getting the 2 points, rather than doing something that would give us a 30% probability of success in shooting a 3-pointer. So that's not our game. Now, we play defense, right, because we hedge, but our offense is making the layups, making the free throws. So rarely will we make a low percentage shot, right? Rarely will we go in and shoot a 3. So we don't do the flashy stuff, right? So Alabama does a lot of good things, a lot of flashy stuff, and they do some good layups and short shots as well. But when you miss that many free throws, you're going to lose a game. So we're not going to lose a game because that's what we do every day. We just go in, do our little boring layups, and that's not flashy, right? We're not the running rebels of UNLV from days gone by. We just get into the paint and we take the shot. So it's I don't know. I'm heartbroken over the loss, but it was a good game. Definitely a good game. But Alabama, work on your free throws. So let's see how we're doing today. What is our net lick and all that? Boy, it looks like my computer is just going slow today. So let's see what we got here. Net lick. Let's see if I can move this over for everybody to see. Hope y'all had a good weekend too. Boy, this is just a slow computer, but let's move everything over here. So our net lick for the day is, I can get my little thingy-majig here to work. We are at 52.1. Oh, it's moving all over the place. 52.184, we'll say. 52.184. There's the Bama baby. And he's coming in. Hey Jim, good to see you here. Matt, what about the game, man? Free throws, right? Free throws.
You nailed it.
Got to make you free throws. And that's what I was saying, that's what we do in trading, right? We're not for 3-point shooters here. We play defense because we hedge and we make our free throws and we go in for the high percentage layups. And boy, that just hurt me last night. But man, was that exciting, making that 3-pointer right at the buzzer. I was like, oh man, we got this. And then nothing. Just
of all the people that took that shot, Alex Reese took that like a boss.
Yeah, he did. I mean, that was just, it was so pretty too. I mean, just, I'm like, and then I was like, man, we are really, we're gonna be the champions. But then it was like, so that hurt, right? I mean, but I'm optimistic about the future of Alabama basketball. I am optimistic.
I'm glad they went ahead and extended his contract.
Oh yeah, let's keep him around. I like him. And they were talking about him wearing the thing kind of as a throwback back to Wimp Sanderson. Yeah, I like that. Let's remember our history and but it was a hard day. It's hard for me to get out of the bed today, to be honest. I was a little upset. I couldn't sleep because I wanted us to do so much better. All right, let's see where our Greeks are today. Let's see here. I'll pull it off to the side a little bit. Let's see. I'll let y'all take a gander at it, and then I'll move. Let's see if I can move it off to the side so I can do this a little quicker. All right, we got negative deltas, we got positive theta, and we got positive vega. So life is good, y'all. Life is really good. So let's record all that. Now, who are we pulling for the who's in the Elite Eight we're pulling for? I know I ain't pulling for Michigan. God, I hate Michigan. I hate Michigan like I hate Ohio State. Just can't stand those two schools. Just like I can't stand Notre Dame.
Pulling for the Zags.
Okay, I can do that.
My cousin's wife got her master's from Gonzaga.
Really?
Yeah. Now she's from Washington.
That's cool. Yeah, I was up
So,
in all
yeah.
your old territory. I was in Gadsden, and I was in Albertville, and
Oh yeah.
I,
My best man at my wedding is from Albertville.
really,
Yep.
man, I was everywhere yesterday, picking up my little pig, and man, we were just where else did I go? Boaz, Boaz.
Yep.
All right, so our theta, y'all, look at this. We're at 300.97 on theta. This is great. Positive Vega. Look at this. Now, I did not do a Rick trade on Friday because I saw that my broken wing butterfly was expiring today. So I was like, I'm just gonna, instead of putting on a Rick trade, we'll just let that broken wing butterfly expire for today. So let's see how much buying power we're using. Oh, this is good. My buying power went down a little bit. 387.53. Who'd ever think Alabama people would be basketball fans? This is awesome. Look at this, y'all. Man, I'm just doing great. This is awesome. Now, I'm using a little bit too much buying power, right? But life is good. I mean, this is what it is. This is what happens when you make your layups, when you make your free throws. All right, so the forest is in great shape, y'all. The forest is in great shape. We got great theta, and our deltas are negative, and we've even got positive vega. So I mean, I can't make this any safer. I just can't. It just is a really, really good play. So let's go to our credit spreads and just see how everything's looking. I like seeing how far out of the money I am on all this stuff here, right? 300, 300, 300, 400, 400, 400, 380, 295. Now, why is that giving me a NA? Oh, I know why, because I didn't put the things on there. Why does that look so funny? Why does that one look so funny? 3,800, 3,870. Put it on 324. Days to expiration was 2 on 34. So that thing has expired. Now, wait a minute. That's the one I thought that I had already booked as a profit. Did I not book that one? Oh, I booked it. Let's see. I think I booked it, but I don't think there we go. Yeah, got 326. I didn't make it green. That's the case. All right, I see what's happening. So I got 52.74 on there. Yeah, let me make that green. That's the one, y'all, that I forgot to put in the other day, and it expired on Friday and made me 52 bucks. So let's just let me delete here, and we'll make it green. Layups, 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 free throws, y'all, free throws. Think about it. I want y'all to think about, if you're not a basketball fan, think Parcheesi or whatever. Think of what we're doing in terms of what others make their mistakes at, right? Let's be free throw shooters. Let's be layup people. There we go. So y'all, all of our stuff is looking really good. Let's look at our broken wing butterfly that we've got closing today. Let's see what that thing looks like. Oh, this slow computer's just driving me nuts. Okay, let's pull it over here. And probably the easiest thing to do would be to see things in groups. I've got it in a group, I think. Show groups. So I think I've got a broken wing butterfly. Come on, man. All right, here we go. We got hedges, income trades, butterflies. Butterflies. Hedges, income trades, Rick trades, unallocated. I need to put those in their right place, don't I? If I'm going to do this grouping thing. So a MES, move him to an income trade. Apple, that's an income trade, right? Move to income trades. Diamonds, we call that a hedge. There we go. Hope y'all been able to play with the group some. It's really kind of cool. You just got to remember to put your new trades in there, which I apparently have not done. Disney, IWM, supposed to be a hedge. Doesn't look like a hedge when you look at it on paper, but we'll put it there. Q's is supposed to be a hedge. Move to group, hedges. SPX, we call those income trades. And XSP, we call that a hedge. Get everything back into our play. Oh, where did I move that to? No, it don't go into micros for the love. Move to group, hedge. There we go. Now, Rick trades. I need to delete that one, I think. Let's see. We'll move this to income trades because I think I gotta. Now we don't have anything in the Rick trades. I'd really like to delete Rick trades. How do I do that? I think I go over here. Yeah, delete group. Now let's see how things are doing. Now let's see how the butterfly's doing. So let's close this up. Let's just focus on the butterfly. So let's give me a little negative delta. 0 theta. You know why? Because I am at what? 100% loss. Yeah, this is kind of cool, right? So I'm going to make $182 today. Now, keep in mind, I do not let any options expire that are, short options. So we're definitely got short 2 options in a broken wing butterfly. So what we're going to do is we're going to let that little puppy probably just expire today. Look at that. So we're looking really good on that. So I don't think there's anything to do with our butterfly, but let her just go off into glory and do what she does. How much buying power is that taking up? About I think it was taking up about $1,000. Let's see if we can get into Tasty Works. If that doesn't take too long, because what I'd like to do is put on another one of those, right? Those have been working really good. It's one of the campaigns that we're doing that's kind of in the background. It's kind of a 10-day trade, broken wing butterfly. And those have been working out really good. So I like adding that to the campaign. So we'll potentially, if I can open up Tasty Works quick enough, we'll potentially do one of those. But you do know what we need to do today. We need to do our Cameron Skinner trade, or as I like to call it, the Kirk Cameron trade. So let's go to SPX. Where are you going to do it at, Bobby? Well, just like we practice every day, we're going to go out closest to 60 days. And this thing is just killing me with this. So let's go out 60 days. Okay. It's just easier to visualize things in Tasty Works in it. So let's see what our expirations are here. Probably 53 days. Is that right? Oh man, look at this. We've got a 60-day open. Well, let's take it. Let's go to 60 days. I like it. I like it a lot. Now, how do we know what to do with this Cameron Skinner trade? Oh gosh, did y'all happen to read all the Facebook posts on Friday? People were blowing out accounts and all kinds of stuff. Someone lost, they had a $5,000 account and they lost it all. And I'm like, dude, what are y'all doing? Y'all shooting the 3-pointers, baby. What are you doing? Take your profits when you can. And it was just sad to see so many people just, blowing out. And one dude lost $20,000. And I'm just sitting there going, why? Why would you do that? What are you doing? I don't know, y'all. I'm too conservative. So what you do is to do this trade, you go, okay, it's currently at 39.52. So you take the current price of SPX, 39.52, to figure out kind of where you want to be, right? Multiply that by 0.9 to get the strikes that I'm really kind of looking at, and that would be the 35.56 area, right? So 35.56. Let's see if we can go there. 35.56 and SPX 60 days out. 35.56, 35. And I've been doing these about 10 apart, right? 35.56. 35.60. There we go. 35.65. 35.60, 35.65. So I've been doing those 10 wide. So let's change this from vertical to deep and wide. Let's do 2 strikes. 1 month time 2 strikes, vertical, see if that'll do it. All right. No, I don't want no stinking pairs trade. Yeah, that's the thing about Thinkorswim, right? It's got so much junk on it, just so much that you go, man, I'll never need that. If my little thing will come, here we go, come back in the picture, baby. Let's go to all products with a life of its own. So we were saying 35.60, right? 35.65, 55, maybe this one, you know, we could sell that one, maybe 60 cents, 35.70, 35.60. Let's see what that looks like. A dollar credit would be really nice, wouldn't it? 90 cents, maybe more realistic. So let's just send that one for 95 cents and let that work. All right, so we'll let that one work. Those normally take a while to fill, so no big deal with that. So we got our Kirk Cameron trade. Now we'll probably do a Rick trade today, but I'll do that in the last, you know, probably last 15, 30 minutes of the day. That's when all the big moves come, seems like anyway. All right, so we go from that, and let's go to our equities trade. Really, there'll be nothing for us to do in equities other than look, right, and just admire what we did from the other day. Let's see. So silver is a nothing burger, and oh my gosh, that IWM, man, look at that. That is just pounding us, pounding us. Yeah, we know there's a problem. We know that your Thinkorswim is running slow as crap. All right, so let's go back. Down 400 bucks, y'all. Down 400 bucks. Wow. That's on the new trade too, isn't it? That's okay, because that probably tells me, see, even though we see this, right, that probably tells me we're not doing so bad in IWM over here. So let's go here. And let's go look at IWM as a hedge, supposedly. Let's see, IWM. Yeah, look, y'all, we're down 63 bucks on that. And look, we're up 158 on the open on the whole deal. So even though that's down 430, that entire trade is up $158. It's down 63 for the day. So even with that going against us, look at y'all, look, y'all, our hedges are up $450 today, even with that one particular position down $464. Isn't that great? Because our overall hedges, now IWM, you know, is now out of hedge territory because it's giving us positive deltas, but it's still giving us positive vega. So we got 287 positive vega there, nice theta, and nice negative delta there. So we're fine, you know, even though you look at the negative 456 and go, gosh, that's hurting. It's really not. So remember, don't look at your individual little trees. Look at your overall forest. So let's go back to that little puppy. Open back up. Yeah, so I think everything's looking good there. So everything's looking good. Now this is driving me nuts. Give me 1 second. Oh, it's just Monday all day long. Y'all, I've got all my pigs now. It was good too, because we were thinking, man, that minivan of, or not, prison van of ours was just going to sink all the way back. But fortunately, he did not. He didn't do his business in the until we got to about, I guess, Oxford, right? So we were about 40 minutes away before he did his little thing and started stinking. So, and my mama was in the back and she was coughing. And it was kind of bad, but we got our little pigs for our little pig farm now. All right, so everything's looking good, y'all. I mean, even though with that negative, and if these should grow right to offset that one, and hopefully this one comes back a little bit so that we're still able to have a payday on Thursday because we got Good Friday on Friday. All right, so all looks well there. So let's go to our bread and butter. This, we ought to call this the free throw page, right? This is where you and I are making the free throws. No 3-pointers here. And it's telling us, because it's got it highlighted, that the 35.40 put is our most profitable trade. 35.40 put. So let's go close that one and book our 53 bucks. Let's see. Micros. 35.40, I believe, or 34.50. 35, 34. Let me sort these by my profit and loss on the open. There we go, 35.40. Control, just take it off. This is a layup. So sweet to do this. All right, here we go. So let's go close that. Mid and the net are 14, so we'll do it 14. Get out of it. There we go, we're filled. My phone is beeping. Delayed reaction. So we'll come in and manually put that price in, right? 14. And we'll delete this. And we will put our exit date so that our little computer here will recognize it as profit, because we're going to need it to offset some losses, as we always do. So let's see if we're starting the week just right. 3/29/21. There's our 53.31. I guess I'll call that 50% profit. All right, y'all, so we're on track to do 10,481. That number just keeps on going up, doesn't it? Which is nice. I mean, this is just a sweet, sweet, sweet little campaign that we got going on. Matt, did you ever figure out what you might do with a campaign? You've been thinking about it? We got to get you on the campaign trail. All right, so make sure yep, there's our profit for the week. So we're up 53.31. Hey, we finally went over a projected yearly return of 30%. We're shooting for 50%, right? But now we're at 30%. We've booked almost $6,000 in profit this year. Now, I will say this, keep in mind that goofy me future, so I'm down, $1,500 bucks on future. So that comes against that. And then when you're looking at your stuff as well, you go, how come our net lick isn't up that much? Well, we lost 1,400 on futures. And what else is going on? You got to keep in mind that all of this stuff together, we're down $3,200 on our open positions, right? So we're closing winners and allowing time for losers to come back. So, the 3209, affects your net lick. But in no way are we, upset or, concerned on any of the positions that we got. Everything's doing fine. It's just we close them when we get an opportunity, right? And we roll them if the opportunity's not there. So keep in mind, that's why our net lick is not up that much. But as far as book trades, yes, we booked almost $6,000, but we're down 3 on our open trades. And then I've got a $1,400 loss on stupid little scalps that I've done trying to hedge when I got nervous at different times, right? So I'm trying not to get nervous anymore. So that's kind of the deal there. So Let's go back to our spreadsheet. It will tell us what we need to do as far as the micros, because we know we're going to put one on. And if we type in MES here, and two, if you wanted to do the MES or the MNQ, the NASDAQ product, you could do that too. So it, maybe you do one which has the most volatility. I'm just more comfortable in the micro E-minis. So it's saying recommended delta is 15. Okay, well, let's go get that closest to 60 days without going over. So we'll go over here. There's our macros. We do have a 60 days, so we are totally finished with that expiration cycle. So let's go out here. Let's do these as single. Sleeping single in a double bed. Oh, I just remember about Barbara Mandrell. Oh my gosh, I remember watching the Mandrell sisters on TV. Now, Matt, you're too young for this, but oh, the Mandrell sisters and those beautiful eyes. Lord, help us all. So we're going to 15 Delta. Delta Dawn. What's that flower you have on? Little Tanya Tucker there. So we'll do this one here. Let me right click it, copy, and sell that one. 26.25 is fine. We should get filled there. Let's wait for it. There we go, 26.25. Wait a minute. We're in the 53 days. Did it? Geez, did it do the wrong expiration on me? It did, didn't it? Dang it. And I wanted to be in the 60s. Yep, and look, we didn't even get a 60. And I know I opened the 60. All right, okay. I got you. It's probably operator error anyway. It's probably me. It's not you, it's me. I've got to break up with you. It's not you, it's me. Anyone ever do that to y'all? Oh, didn't that hurt? Listen, Bob, I hate to tell you, but now listen, it's not you, it's me. I'm going through some things and I need to, I'm gonna have to cut you loose for a second. Oh,
that's in the top 10 live.
Isn't it though?
Yeah.
I hate that stuff. Did that ever happen to you back in the day? I'm sure it did, Ken.
It did not, but I've delivered that line many times. You see, I will confess, there's a book called The Art of Seduction, and if you look on the chapter on RAKE rakes, that's my biography. Yeah, I was a bad boy when I was younger.
I got you. That's hilarious. You delivered that. I don't see. Here's the thing. Let me tell you about mine and Beth's courtship. Beth and I dated off and on for 6 years, and during that 6-year period, Beth ruthlessly just kicked me to the curb 6 different times. Now I joke about this, but I'm not entirely joking, y'all. It would always be right after Christmas and before New Year's. So Beth and I be going really good, right? Everything's going great. We have a great Christmas together. And then some way, somehow, it was the Bobby, it's not you, it's me line coming at me. And she would deliver that before, and I'm sitting there going, wait a minute. Did she just make sure that I bought her an expensive, Christmas gift and then cut me loose?
Well, the solution to that is give her the Christmas present on Epiphany. On the 12th day of Christmas. At least it'll last another week.
Well, and here's the thing. Then somehow, some way, I joke about this, y'all, but in the back of my mind, there's a lot of truth in this. Now, Beth swears it's not the case. But somehow, some way, we would always get back together by Valentine's Day. Beth, were you just using me for the gifts? I'm sitting there thinking, because I did really nice little gifts too. I'm thinking, she just cut me loose, and she heartlessly, boy. And then she went with this old guy that drove a pickup truck, and I'll never forget Joe Diffie. There's something about was out about the time. There's something about a man in a pickup truck, and I just hated that song. God, I hated it. And I was thinking about her riding around with that old boy, and people thought that our marriage would not last. They said there's no way. Beth dumps, and every time I get back with Beth, I would be like, this time I'm going to deliver that line. I'm going to tell her that, I'm the one that's getting out, and I never did. And so been married 21 years later. Isn't that crazy?
Love is a disease with no cure.
Isn't it though?
Yeah.
That's good. Hey, how come I'm not getting credit for my my little thing that I just sold? Yeah, Beth, I tell you, Beth puts up with a lot with me though. So she's a great gal. She's volunteering at the school right now. I said, volunteering? So what are you doing volunteering? I said, if you're gonna go to school and work every day, shoot, I'll sign you up, put you on the payroll, you know. She
Give
loves
her a free
volunteering.
lunch.
Yeah, get free lunch at the lunchroom or something. Jeez, girl.
Yeah.
Volunteering. Because you know, those are the families that volunteer. You know, I'm like, that ain't us, girl. I said, you need to, you know, what is it? It's like I never
You
wanted to
go.
live. Do what, Ken?
I was are you at public school?
Yeah, it's public school.
We had our because we had our kid in a parochial school, and let me tell you, they had their hand out every day, and then they had you on the list for volunteering. So it's just a different world.
Yeah, it is. You know, it is. And Beth's like, Bobby, she says they don't have anybody to volunteer. You know, and she's giving me they just love me coming in and stapling papers and filing this. And she's just all into it. She just loves it, you know. And I thought, we're that family. We're not supposed to be, you know, that's like when we first got married, we were looking at neighborhoods to move into. And I said, listen, here's what I want to do. I want to go around at about 8:30 in the morning. And if there are people that are jogging in the neighborhood, we ain't moving in. I said, I want to move into a neighborhood where people are strapping on their work belts and hopping in the truck and leaving at, 7:30, 8 o'clock in the morning to go to work. I said, we don't live in the neighborhood where, people are jogging and walking their little dogs. I said, that is just not me. I said, holy cow. And so sure enough, that's where I was looking, right? And so we lived in I like the blue collar neighborhoods. That's where I feel, I don't go to the country clubs and to the, I don't know. Now I do volunteer. I'm the treasurer for the band, right? And so I do enjoy volunteer, but see, I get to do that here. I don't have to see nobody. I don't have to do anything. I just keep up with the books and records, right? Now we got there we go. We got in $130 today. I had the wrong date there. So now it says I need to do $274 for the rest of the day. And that's fine if y'all, do stuff. Because I always joke with Beth. I said, listen, as soon as all of our kids are in school, and Beth, we sacrificed when we adopted her in 2005, 9 months old from Guatemala. And we decided that Beth would be a stay-at-home mom. And we think that's been the best thing, right? That she's been able to stay at home with the kiddos. But hey, when they all in school, I'm like, Beth, it is time to go back, hon. Time to get you back into the stuff. All right, so we've sold our micro. I mean, we've done everything that we could do. Thank God we ain't got no zero DTE trades. Though, I started thinking about it. Everybody's like, oh man, I'm scared of the zero DTE and people blowing up and lost all that money. If you look on Facebook the other day, and it really is disheartening to see them losing that much money, but y'all, you cannot leave a zero DTE trade going on that you got a 80% profit in, going into the close. Now, I'm letting my butterfly trade. I'll kind of watch it. I guess I could close it right now, but I'd have to pay, commission on however many legs. I got be 1, 2, 3, 4 different, things. So I don't know. But it got me to thinking I am a zero DTE trader, because what I'm doing is I'll today put on a rig trade at the end of the day, and I'll let that one go until, Wednesday, right? And on Wednesday, it will be a zero DTE trade. But I can't explain this to you. It's like I'm not worried about that trade though, like I am if I had put one on this morning. If I put on a trade this morning, I'd be like, I'd be watching it all day. But now I'm really not that concerned. So let's work this down a penny or two. I love getting 90 cents on these. Don't tell me it's not traded. We know it is.
Hey, Bobby.
Yeah.
Monday's the only day I do a zero DTE because I don't like holding a rig trade over the weekend.
Yeah.
And so on Monday morning, if the market's down like it was today, I'll sell my put spread. I got 40 cents for it, and it's already 30 cents profit. You
Oh,
know,
awesome. So you
and
did
I'm
do a 0 DTE today. That's
that's
cool.
the only time, because I'm with you. There is no reason to have anxiety, but I don't want to think about the markets on the weekend. You know, and I will with the and today was approved right. If I had sold a decent Rick trade on Friday, I might have woke up with it at the money, you know, or close enough for me to be in the money. So that's the one time. But you're right. There's no need for that anxiety. You know, people are hooked on adrenaline, and they also want to be the stud that makes the money. And you and I both know that's fiction. You know, it's the tortoise, not the hare.
Yeah, isn't it amazing? You know, Ken, I mean, and you and I were probably more gunslingers, you know, when we were, you know, younger too, right? So,
Oh yeah, I
but
made
it,
every mistake possible.
yeah,
I've done it all.
but at this point in my life, I'm like, dude, slow and surely, you know. So, I mean, you know, I know basketball. If you're watching the basketball, watching all the 3-pointers is really good. But I like the dunks better than the, you know,
Yeah,
hey, a dunk, man, that's a guaranteed, you know, that's a guaranteed.
yeah, it would be a black swan event to see someone blow a dunk.
Yeah, it would be a black swan event to see you blow. And that's why we do high probability trades.
Mhm.
No need to do all this stuff that's going to cause us anxiety. Jeez, I mean, oh, I will say this though. Beth was fussing on me something. She, you know, she got that Apple Watch. This is the funniest thing. So she's fussing on me about something where we're going to pick up the pig yesterday. And I'd taken the wrong turn or something. And she blew up just a little bit. Like you guys, I know all your wives every now and then will, you know, blow up a little bit. And her little Apple phone alerted her something about her oxygen level or something. And I thought, God, that is great, right? I mean, it was like, hey, Sparky, calm yourself down. Even your watch is telling you to leave me alone.
My wife's got one too, so that might be why she hasn't fussed at me in a while.
Oh, God, it was great, Kent. I'm like, oh, wow. I said, how awesome is this?
Mhm.
You know, a watch that is telling you, hey, leave Bobby alone. I mean, it's telling you to breathe or whatever, but it was kind of cool to, you know,
Yeah.
to actually see the watch pick it up that, hey, you know, your breathing's out of order. Oh, man, I wish I could feel that. Now I said 85. I don't know. I don't know if I need to. Yeah, here's what I'd rather do. I'd rather take in 90 cents and move the strikes up one. So I think I am going to just still let this one work a little bit. And you know, I'm thinking to myself too, y'all talked me out of it. I mean, why do I wait till the end of the day to put on my Rick trade? I mean, the market's down now. Let's see how the market looks.
Bobby, I
Why?
got two theories there.
Yeah,
One is that if you look at it in the morning, if you got to spike down, if follow the rules, when the market's down, you sell a put. When the market's up, you sell a call. And a lot of times, if you just look at it, a lot of times the market closes up at the day. So so that's why I do. I often look for the Rick trade in the morning.
yeah. Rick trade in the morning. And you see, we're in the first look. I mean, this is another. I mean, it's not a range. It's not a trend day. It's a range day. I mean, look at the market ranging, and now it's back into the 15-minute opening range. So nothing to do here. So I think I'll watch it. I may try to get it back when it comes back in here, which it probably will because it's ranging, right? So who knows? I mean, that's the thing. Yeah, do it. Um, do this thing to where it causes the least amount of stress. You want to put it on the morning, fine. You want to put it on the evening, fine. You know,
There's advantages to both. One is so
yeah,
you got 8 hours less anxiety, or, or
right.
yeah, or 6 hours less. Yeah.
Yeah, 6 hours less anxiety.
Mhm.
Yeah, so it's just where you comfortable. And I've been putting those on at the end of the day, so we can do that. Look at this, y'all. If you'll see the AD right now, I mean, it's really pumping. Look at that. It's just a little stair step up. Not that I'm doing my day trading stuff. Not that I'm saying go long, but I'm just kind of looking right at what that's doing, and the AD is at a high of the day. Oh, nothing really to do there. Nothing really to do there. All right, let's do a little talk, Ken. Since let's do a little talk because I am really excited about the the AIM stuff that we're looking at and everything. And
I actually bought that book last night and I started reading it.
I finished it last night, and
I'm a chapter in.
dude, let me tell you something. I think it's going to change everything, man. I really, really do. And Ken was doing all this work on it, and then I told him yesterday, I'm like, Ken, hold off a little bit. Chapter 16 changes everything. So
So did 14. Yeah.
yeah. So he changed a lot of things there, but it's still just a powerful, powerful thing. And it makes me mad because I think I can only adjust I'll check, see if I can do it today, but I went into my thrift savings plan, with the government, and I put 50% of everything into the G fund, which is the guaranteed government, whatever, fund. I put 50 in there. And then I broke the other 50% up into the C fund, which is SP 500, into the international, into the small stock fund, and into some type of bond fund, right?
That's
So
the F fund.
yeah, the F fund, exactly. So I split it between the F, the C, the G. Now, my 50% in G, I've got the other 50% in the C, I think it's S, maybe S fund, and then the F and anyway, so I've got it broken off into those. But now I'm like, crap, I should only put 20% into the G fund. So I got to go back and see if I can, start it back over, but I'm going to run down on that. And then I'm probably going to add a few $1,000s to this particular account and start doing it on a smaller scale in here. But I'm really excited about it. And what I did is went to Ken, what I'm thinking I'm going to do is I'm going to do something like the UPRO, but I think I'm going to divide it between a couple of the leveraged ETFs. So there's one for, the S&P 500, there's one for the Qs. I think I'm going to spread that around a little bit, but I'm really looking forward to your, what are you now on, your 3.0?
Yeah, I just started. I haven't started it yet, but my 3.0 is going to incorporate the portfolio concept, and it's going to add in a feature where you can take money out and put money in. In other words, because when you do that, you automatically split it into the cash and stock, and then you up your I forgot what it's called, position control or something like that.
Position control, yeah.
Yeah. And so that's all that. That's the main things that are different. And I've been struggling over, because he says I'm not here to tell you how to make your portfolio. He's just telling you when the signals are. And so, like you, I was given a thought experiment last night. And if I was doing this in a speculative account, in other words, one subject to tax, I would look at making a portfolio of those 1256 ETFs and indexes and things like that. So I'm looking at putting, I'm implementing it in my wife's IRA. I'm devoting $60,000 to it. That's $6,000 over 10. And so I did buy Ford today.
Oh, awesome.
I did 250 shares because that fits within the 3,000 budget. And I'm going to be looking at SLV. I'm going to be looking at UPRO. I'm going to be looking at like something exactly what you just said. Let's look at some of these ultras, because it's the upside bang that you want. You want volatility. Because I was scanning stocks today, and I was looking like at the dogs of the Dow, because there are two secrets to this method. One is you need to buy low. He doesn't actually say that, but you need to buy near 52-week lows. And the second thing is you have iron rules about when to take profits and when to get in. And that's what does it. When I looked at all those curves, as you saw on my last spreadsheet, they all follow an exponential curve. And which basically means we're looking at the power of compound interest. And it's nothing magical about this system, except it gives you hard rules about when to take profits and when to get in. And that is my biggest weakness. I got a story I remember over and over again. I had a penny stock that was like, I had a couple thousand shares of it. It was worth nothing. And then one day I'm driving down I-95 and I look on my phone and the damn thing's $12 a share. By the time I got off to the side of the road to maybe put a trade in, it was gone. You know, it's just like that. You just take your money, and so this is a good system, and it for someone like me who gets a big head now and again. This will keep me straight.
Exactly, because I think what we all are kind of figuring out is we like these rule-based things, right? We like the structure. I need the structure because in my personal life, on my, my diet, I've told you, I'm out of control eating. Now I've got that under control, that I'm logging. I've got rules. I need that. I need that in
Mhm.
every aspect of my life. And, this is the same thing I've done in my thrift savings plan. When the market goes up, then I, have been whittling down some out of the C fund, going to the G fund. And when the market's down, I'll take from the G and go to the C. So now we're going to have a rules-based system to tell us, how much and when and all of that. I just am really excited about it. Ken, I don't know if you're at the point in the book yet. Did you read? He actually did read, did a page in there that talked about the cheesiness of the title. Did you catch
Oh,
that?
I had got that because I'm on like chapter 18 right now or something like that. I'm nearly finished. I was trying to read it, but last night I kept falling asleep. Spent 15 minutes on one page. I said, you know what? It's time to shut it down.
Oh
And,
yeah, I finished it yesterday, and now I'm reading the one by the guy on doing the leaps with it. So we'll see how that turns
yeah,
out. But it's an interesting thing. It really is. But he was talking about the cheesiness of the name and how a lot of people wouldn't take it take it seriously. And that was me. I was like, if I had seen that in a bookstore or
hey, book,
online,
oh,
that title, I would have just gone right past it and said
yep,
garbage,
yeah, exactly
garbage.
right. That was my thing. When you mentioned that title, I thought, what are you drinking? You know?
Right, because you
Yeah,
read the title and it's one of those cheesy. It sounds like one of those cheesy get rich quick schemes, And I was like, but then you start reading it, you go, oh my gosh, there's gold in here.
there is, and he says it in one or two lines. What, why, how it helps you? Because most of us, we are trained to look. It's sexy, it's cool. When that stock is flying high, you're there. You don't want to give it up. But the truth of the matter is, that's that's when you need to sell it, and then you need to follow Barry Rothschild's saying. It says the time to buy is when there's blood in the streets. You know,
Yeah,
when the market goes down,
yeah,
and you
yeah.
need to have cash to do that. And
Well, and
that's
then
why.
that,
Go
yeah,
ahead.
think about it too, Ken. So, yeah, as I've told the story, recounted about how I was in the doctor's office closing positions when the count was up over 200%, and I go, wait a minute. But the thing that I did wrong that day is this: I should have booked those profits, right? And instead of just staying out of the money, I should have put more back in at that time. That's
Yeah,
when I should have gone back in when there was blood on the streets and everybody was panicking and doing that. But it's hard, isn't it? It
yeah,
really is hard when that's actually happening, and that's why the aim is going to be so strong for us in just telling us how much and when and just doing it very methodically. I'm really excited about it. Almost to a point, I told Beth, I said, it's almost I can't sleep because you're sitting in there and you go, wow, this is going to work, and you're thinking about how to implement it and different types of things, and it's really just for those old farts of us that this is what we do. This is our hobby, or it's not a hobby, but this is our passion, I guess. I don't do anything else. I told you I used to play tennis, used to play basketball. Now I don't do that, and this is what I sit around doing all day, dreaming about this stuff. So it's nice to be, cooked in with all of you guys who are kind of doing the same thing. And Matt, I'm glad that you bought that book. I mean, I'm thinking, if I had implemented that when I was your age, right? I'm trying not to look back, but now, hey, Bobby, you're 50, implement it now. Let's say we got another 20, 30 years in front of us. I think it's going to be really, really strong for what we're doing.
one comment about the book that people who don't have the book or Matt who just got it, that you need to put. This guy is full of himself. All right. And he speaks of this AIM method as if it's a living creature. He's apotheosized it into some kind of financial god. And you can just take him with little tongue in cheek or take them with a grain of salt in that regard. Just pay attention to the rules because it's sound. And when we go to the Q&A section, uh, he is a smug bastard in many cases. And so just ignore that. And again, a lot of people have been, been blowing smoke up his back end for so long. I guess it's natural for him to feel full of himself. It is a great system though. And uh, and don't let any of this nonsense deter you. The title itself was bad news because I would have been all over this book 30, 40 years ago if it had a different title.
Yeah, if it had a different title, it's just amazing, and and he recognizes it. That's the thing, and I'm thinking, well, why didn't you do another edition and change the name? I think the one that we're reading is the fourth edition.
Yeah.
I don't know. Maybe because that book, I hate to say it, but that book appeals to the least common denominator of traders and investors, right?
Yeah.
That's the people who will be in the market for a month or two and then they're gone because they're going to lose it all, and they're gambling.
Mhm.
So that must have been his target audience, I guess. But people
Well, he
like
wanted to
us,
sell the book.
yeah, he wanted to sell the book, right?
Yeah, he's a writer by trade, and that's one thing you get to know. Of course, he's going to support his work because he makes his money, and he says he hasn't made $1 million from this system. He's made $1 million from selling the book about this system, and
Yeah.
he's honest about that. And see that, and I have a funny feeling that it was the publisher who made the title because it used to be Synchrovest in the earliest edition. The earliest form was Synchrovest, and or something like that, and uh, and so the publisher probably made that title, and because they want to sell books, they don't want to make money in the stock market, they want to sell books.
Right. They want
Yeah.
to sell the book. And did you guys see? Apparently, it's not in print anymore. Did you see what the cost is on the hardcover or the paperback, whatever it was, like $400 or $500?
Oh, more than that in some places. I'm a pretty savvy. I'm a bibliophile. My office is a 4,000 volume library, and uh, and there's probably 5 fiction books in here. Um, the and it's like I know where to look for it, and I couldn't find one for less than $400 or $500. And so okay, I'll buy a Kindle book. I hate Kindle books, but
I'd rather have the paper myself. No doubt.
but it's like I ain't paying that kind of money for a mass market paperback.
Right.
Yeah.
Right. I wonder if it's on eBay. Did you check on eBay at all?
Oh yeah, I mean that's part. When I look for a book, I mean I have several booksellers that I just tell them what I want, and they'll find it for me. But it costs. Yeah, and if it comes up on eBay for like less than $30, it probably will get snapped up in a New York minute. But I would, so I'd turn around and sell it for 300.
Well, let me ask you this: do y'all think there's other groups of people out there like us that are just now finding this book? I mean, I'm just curious.
Well, I did do some Google research when you first, because I was doing I didn't want to pay the money, I didn't want to buy the book, so I looked to see if you get a PDF copy, not available. There were user groups, most of the user groups. The last entry was like 2010, something like that. So this is now falling out of fashion, and which is actually good for us because nobody else is looking. You can't be with the herd if you want to make money in the market. I mean, how many sheepdogs are there compared to sheep? Okay, or wolves compared to sheep? You want to be on the ratio that's got the odds in your favor.
Well, and that's the thing. We live in that society now to where GameStop is where everybody wants to be.
And they can keep it, too.
And they can keep it. Y'all, I'm telling you, we are going to be so much more successful. Doing the slow, tried and true rather than what they're doing. I don't know, and I think about all the people with the stimulus money and the checks coming in, and they're tossing it in the market, and it's just crazy.
Well, think about it. A couple, you get the 600 plus the 14, you get 2,000 ahead. So you take mama's share and your share, put it in account. That's $4,000. Okay, take 2,000 of it, and you can buy. You can find some inexpensive stocks uh, that fit this kind of strategy. And if it's $4,000, you could be churning this money out, and then maybe in a year or two, you can give Mama her $2,000 back.
Yeah.
Yeah,
Matt,
and
that's what I'd be doing, with some of this, start, I mean, you get into the book and you'll go, wow, this is good. Now, I will tell you about the book too. There's going to be all these chapters where he's talking about mutual funds and all this kind of stuff and trying to get a guaranteed rate. That's just garbage. But it's great to see the history. I enjoyed it for the history to go, wow.
well, see, I was there.
Crazy
I
change.
understood every word.
Yeah.
I was there during the mutual fund time because I started out with, I bought my first book was dollar cost averaging on mutual funds, and did my spreadsheet on graph paper, and it was all that. And it's like, so everything in that book I understood, but honestly, Matt, if they start rambling on about mutual funds, scan the chapter for any meat because you're not going to find any.
There's nothing in there. Nothing in there.
Today, the ETF is and these index funds, that's the best mutual fund, quote unquote, that you'll ever need, because there's no fees, there's no commissions, there's no maintenance costs. There's just it's just the the market's there's a fee attached to it, by the broker and or the clearinghouse or somebody, and just go there, and that's the best thing. I do have a question for you, Bob, your opinion rather.
Yeah.
When I was thinking about portfolio structure, I thought about let me find one stock between 10 and 20, one stock between 20 and 30, 30 and 40, 40 and 50, and then 50 and 60, or 50 to 100. And because I wanted to have some diversity of price, because with the price of the stock determines the number of shares within the budget, because I am going to do equal dollar value for the stocks. And I thought about that for a while, and I abandoned it, but I wonder what your opinion of that was, because now I'm going to go with the 1256 and other ETFs like the TQs and things like that.
Yeah, I don't think I would. I don't think I target it for that, for dollar amount.
Well, I did
of the
dismiss
stock.
it. I just,
Yeah, I mean, I understand what you're saying. It's kind of an interesting concept, but I don't necessarily see. I mean, I'll think about it, but just offhand, I don't see the necessarily the merits of it. But
well, that's why I
think,
wanted to do the test.
yeah, I think what I'm thinking, the first thing I thought, man, what would this be great on? And I thought Tesla was the first thing that came to my mind. But then I go, the cost of Tesla per share, right? It's just, it's probably not the one to do it on. But then I thought, you do need something that's going to have volatility, something that's going to go up and down, so that you're, churning this thing monthly, biweekly, whatever we decide to do. You want it to go up and down. So when everybody's panicking with it going down, you're doing wonderful, because you're going to acquire more shares. And that's why I thought the ultra products, right? So if you go to Pro Shares, let's say they've got several on there that I was looking. Let's see if I can go Pro Shares. Let's see. I apologize about my cursor and everything. It's just, let's see. If I go to Google, then I go Pro Shares. Pro Shares, UPRO. Right, so it brings up all this stuff. So let's just kind of look and see what we got here. Pro Shares. I hate clicking on this, y'all, when it's an ad, because I don't like giving Google money. So I try to go down here, and I know Google's going to get money if I do that. So I go down. Am I the only one that does that? That doesn't?
No, I do. I'm the same way as you. But however, I'm of the opinion that Google is smarter than that, and if you click down there, they'll still get the ad credit. So I type it in the command line by itself.
Yeah. So let's see what we got here. Performance and quotes, all this kind of stuff. Let's see, where are they? Trying to see all the different products. Here we go, products. So let's look at products here. So there's the Ultra Pro S&P 500. Here we go. Let's see if we can make this bigger. But what I was doing is looking at some of these in that had 2x and 3x on them, right? So there's the negative. So some of these, let's go to the 3x deals here that have 3x the movement. Where are they?
Maybe you can sort by daily objective.
Yeah, let's do that. Daily objective. Wait a second. There we go. So here's our UPRO, right? Which is 3x there. So it's currently at 90, right? The Ultra Pro Russell, there it is at 106. Ultra Pro Qs, TQQQ. Here's another one, mid caps. Then you got the Dow. And then from there, they go down to 2x. But, you know, even some of these I was thinking would be pretty good maybe to put in. For example, let's see, a metal or something. Let's see. You got the semiconductors. Here's oil and gas, right? Dig. I thought there was a metals as well, gold or something. Ultra high yield, healthcare, financial, ultra gold. Here we go. UGL. If we only had a Y, we'd call it ugly. You know, it's at 55 there. So some of these, Kim, were what I was thinking, right? Because by there being 2 and 3x movements, you know, hopefully that would get you the you know, the ups and downs that we need in some of these different ones.
I agree with you. I'll tell you one thing, the chapter on when he discussed gold, that killed gold for me.
Oh, it did, didn't it? It really did. Yeah.
Now I was thinking, well, SLV is a good, because I like the idea. But I'm doing this in an IRA, so I don't care what it is. But if I was outside of the IRA, I would consider, you know, the long and short term capital gains issue would weigh on me a little bit, because you're going in and out so much. It's going to be complicated doing your taxes. And you know, but so I said silver is still SLV, not silver. SLV seems like still a good choice as a candidate.
Let me throw out some potential other candidates too. Let me show y'all this.
Okay, we'll get my pen, get my crayon out so I can write them down.
Okay, let's look at this too. Let's see if I can find it. If I can get this stupid cursor to work. Why it's slow as crap, I have no idea. All right, here we go. So let's bring up a chart. Let's see what do I have this name? I got so many of these. Claims, basic main, volatility. Must be down here. Let's see what I got here. We've got, come on.
This is a strategy where I do feel comfortable with the Qs.
Yeah. Yeah. It's one of the few that I feel comfortable with the Qs. Oh, here we go. Look at the SPY sector comparisons, right?
Yeah. So, there you go.
So let's look at this. I mean, you could be. Let's just look at this. Here we go. Right. So
I didn't know Ross had this. I have Worden Brothers. I was going to do the sector run myself, but I like what you're doing.
Yeah, so that's the S&P 500 you see with the candles right there, right? Yeah. So then you say, well, what is the top performer right now? And it's this one. Let's see if I can right click on it and figure out what it is. Right click. So that one is the XLE, right? Look at that. So XLE is killing it right now. I hate that this thing's doing my cursor. All right, so XLE is killing it. And so you could say, well, which one would you, like if you're in, look where it came from though. Look, right back in here, they were all bunched up together, right? Then check energy out. So what's happening while energy is making these moves, right? So you go, energy's up. So the AIM system, we're getting out of energy, right?
Affirmative.
AIM goes down, what are you doing? You're getting back into AIM by buying it, right? And the same thing, it's going up, what are you doing? You're getting out of this, out of this, out of this. and I mean, we're just looking at a smaller time frame, but think about this on a larger time frame. Then when it goes down, you're accumulating more shares. I mean, it's a great little system. And then you could go, well, where should I be accumulating now? And maybe it's in some of these that are down the bottom that are more likely at some point to start popping in as you see sector rotational stuffs within the actual S&P 500.
In his book, when he talked about portfolio, question and answer thing was, well, how do you know if you're doing it as a portfolio, how do you know which individual stock to buy or sell? And his answer was the one that's most deserving. And that's pretty vague. But when you think about it, the one that's here, let's use this. Say you got the one you're highlighting now, and the XLE, XLK, you got XLE. Those are the two in your portfolio. So as you're selling the XLE, you would be buying the other one as it's down.
Yeah.
And vice versa. You feed the beast that's going to give you the most potential. And so if you wanted to start this today, I mean, that was my thought. If I was thinking, I got to think about this first, but I would get maybe the best one and the worst one, and then see what happens. Because one day that one on the bottom is going to move.
Oh, yeah, because XLK, that's technology, right?
Yeah.
So we know that now, technology all of a sudden fell out of favor. Can you imagine that, technology is going to go kaboom up here, right? I mean, it just is.
Yeah.
And now it's at the bottom. Now's the time to buy. Now's the time to buy XLK, right? And maybe get out of energy. But yeah, I think we've got a strong little strategy going forward with this. We just got to hash out the details. And we got great minds like Ken that are on it. So that's good. All right. Well, good session today. So Matt's back in the office, so he can't talk. He's been thinking about his thing. He's moved to Tastyworks. He's thinking about it now that I've moved to Tastyworks. I'm gun shy. Yeah, it's gun shy. But you know what? Here's the thing, Matt. Cool thing is you don't ever have to trade options again if you don't want to. I mean, if you don't have the buying power, I mean, you could put your entire thing into an AIM type program.
Well, yeah, I mean, I moved over. Do what?
No, I was just going to say, if you're in an IRA, you can't do options till you get 25K. So you can start with this strategy until you get there.
And chances are you're going to outperform the market too.
So I can trade options. I have a small IRA that I'm allowed to trade options in it.
Oh.
And with TD Ameritrade.
Okay. Charles Schwab won't let you. And I don't know. Haven't got my thing going on TD Ameritrade yet.
Yeah, I have about a $3,000 IRA account that I rolled over from a previous job. That I can trade options.
Oh, good.
But yeah, I think even so with that, a portion of capital devoted to this would be good as well. So, but like I say, we'll hash out the details and we'll get the rules on it. We'll get everything, we'll all look at it and kind of figure this thing out. But this is going to be a great project, I think, for all of us to look at and to undertake. And I think it's going to be really, really strong. I'm excited about it because then, here's the key. Do you remember with laddering of trades that we spoke about? And it's in our resources tab. With laddering of trades, market direction becomes irrelevant. So when you're in this type of campaign with the AIM strategy, market direction really becomes irrelevant because you're buying when it's down and you're selling and taking profits when it's up. So it just further confirms to me that it's strong. It's where we need to be. And I'm really looking forward to it. I'm really excited about it.
Yeah, I'm looking forward to getting further into the book because I hear what y'all are saying. I just don't understand like the math behind it or when to buy, when to sell. So,
well, the good thing about is that we will have the spreadsheet designed to tell you everything, right? So that there's no possibility for fear, greed, or human error to get in the way after we've got, the spreadsheet fully developed so that it'll tell you exactly what to do.
And Ken, I'll be emailing you later to see if you can, when you have time, send me your spreadsheet.
No problem. That's a good one to study from. I will be making one that's portfolio capable. Okay. And that way, that'll probably be the final version before a big change. And then after that, it'll be just refinements and bells and whistles and pretties, because that's really what this thing was about. He says, I don't remember if he said it in the front of the book, but he says it around chapter 12 or 13, 14, that this was designed for portfolios and to look at it like that. And it is, and I'm still divided myself. I still want to keep a separate account for each stock, because that's but I want to make one that's an overall, just the portfolio.
Well,
It's just,
and Ken, I think the reason, as I look at it, I think now with the technology, and I say technology, it's Excel, but it's far superior to what he was talking about when he was writing things on an index card.
yeah.
Allows us to track it, both ways, or, to do it by individual stocks. And, I think there's merit to doing it both ways. And
Well, that's my plan. That's actually it, because I started off with version 2 on the beta thing, which
Yeah.
had everything individually. And so it wasn't hard for me to do it collectively. And but see, the reason I wanted to do that split, I thought that would help me figure out which one to sell and which one to buy, uh, given the orders. And so there's a lot of work to do. There's still a lot of personal, individual decision making, but this will at least tell you when to buy and when to sell and how much. And
then we just got to figure out, are we going to be doing monthly? Are we going to do bi-weekly? Or are we going to do weekly?
well, I was thinking last night in a thought experiment, because I read because he did have someone ask that question, and he says he designed it well, it's not. I have other things to do than sit in front of the computer or the newspaper or whatever. So I was thinking of doing this either monthly or bi-weekly, or every 4 weeks or every 2 weeks. And then I was going to put in an alert whenever there was let's say it had a 10% profit, a day it spikes up 10%. Well, that's a day to get the hell out, sell it. Because he goes on and says, there's nothing to stop you from adjusting this in between the days. All you have to do is you take money, you take the money and you split it half into cash, half into stocks, and adjust your portfolio control. Or you take them out that way and adjust the portfolio control down. So it's real easy to add and to subtract. So let's say one day, you have a 10% spike in a stock. Plato tells us that it's natural law for us to return to the mean. So if you're up $12 today on a $100 stock, tomorrow it's going to try to go back to 100. It's going to give up some of that stuff. So that might, I was thinking of doing that in between, just having a work.
I think that's an interesting concept. So you actually could run this thing not on the basis of time, you could run it on the basis of movement. So rather than, it's kind of like what I did in the Black Swan hedge. So in entering the short puts on the Black Swan hedge, I would normally wait for a down move in the market of 0.4%, right? Yeah. So 0.4% movement. So almost a 0.5% movement in the market was the day that I would do that. So you could actually totally abandon the time, and you could do it on movements of the underlying, once it moved, 0.5% or whatever, you could, that could be your trigger.
Yeah. And that's where I was going. And I wasn't sure at the time. I was just thinking about it. And I just got back from a long trip, and I'm like you, I'm rather excited about this. So I have to kind of like chill, cool my jets to make sure I'm 100% rational on this. But that was one of the thoughts, is maybe ask that question. Is this price-based or time-based or both?
Yeah, or a combination. Yeah,
Yeah.
exactly. So I
And
love it. I'm like I say, I'm so excited about this. I just think it's really, and I think it's cool that it's something that we're all coming together and adding input on and reading the book and coming together. It's like having a book club, so to speak, right? Except, we're not talking about, I don't know, Fabio or whatever, some of the books are around. So we're talking about actually trying to make money and use it in a methodical, strategical manner. And I really, really, really like this.
one thing I like, I mean, I'm still going to do what's going on, what we're currently doing, but this could take a significant portion of my attention away, because it's like one of the reasons that I got involved with this, with you and all, is that I said no to my grandson one day. I couldn't go because I had to watch the markets, and I said I'm not doing that again, and so
Yeah, if anything gets me to a point that I can't spend time with my kids, and if I can't go, I mean, like we went on that field trip to the museum the other day. I mean, that is more important to me than sitting in front of the market. And I mean, there's no reason, y'all, we can't do what we do on a daily basis. You can do it. I swear you can do it in 10 minutes, right? I'm doing micro trade, do my rig trade. I'm done for the day, right? My campaigns are done. And let's say you're slow, right? And I talk about everything that I do. Well, you ought to be able to do it in 30 minutes a day. So being able to have a life outside of trading, now some people want the life in front of the, watching this thing every day. I don't want that. I really don't. But now I'll probably check it 20 times a day on my phone. But as soon as you and I are finished, I'm gonna go make me 2 ham sandwiches and I'm gonna eat a couple of tangerines, right? And I'm done. I love it that way. All right, great. This has been awesome, y'all. I like this style when we get in here and we just talk it out and, try to figure it out. And I appreciate everybody's help and everything, and especially you, Ken, for, coming in and working on this. I think this is going to be really, really strong for us all. And I'm excited about it. So I hope you guys have a good rest of your day.